guys, I'll be doing your mock test 9, BrewBeer. You can see the topics covered: going concern, events, post-reporting dates, evaluation of misstatements, and audit opinion. So pretty much your entire test 3 syllabus. Okay, what you should have picked up in the reading time. Background information. BrewBeer Pty Limited was incorporated in January 1995. So I'm just going to make a note here that they're pretty established if they've been around since 1995. By Kylie Belgium and her husband Ben Belgium, after enjoying a bike trip through Belgium, learning the ins and outs of the Belgian beer brewing traditions. BrewBeer is a privately owned South African company with Kylie as the Chief Executive Officer and Ben as the Chief Operations Officer. So at this point, I don't have too much information, but it does appear like they are owner managed. And if that's the case, there could be a risk that there's maybe a little bit too much dominance with regards to certain people like Kylie and Ben. The company's head office is situated in Johannesburg and their brewery is situated in the neighboring city of Pretoria. So I'm just going to make a note here: risk at a financial statement level because they're decentralized. Over the years, BrewBeer has grown rapidly to become the 4th largest craft beer brewery in South Africa. So rapid growth could be a risk at the financial statement level if the control environment has not been able to grow at the same pace as the company. So there could be weakened controls there. BrewBeer brews and distributes a variety of different craft beers such as Brew Ale, Crazy Kid, Lager Life, and Sweet Ale, among other regular and seasonal beer varieties. So I understand the industry that they are in. I would understand now that there will be additional regulations because it's a consumption that people are going to be purchasing from them. So there will be expiry dates and so on that they will have to consider. So I'm going to put a risk now with regards to assertion level of your valuation of inventory because it could expire. And if it expires and they don't write it down, they've overvalued their inventory. In 2020, BrewBeer was significantly impacted by the South African government's lockdown restrictions on the sale of beer locally. So I'm going to make a note here: risk at the financial statement level. Are there going concern issues if they were significantly impacted with regards to the sale of their beer? So they weren't actually able to perform their operations. In order to limit the damage to their business, BrewBeer identified a loophole in the lockdown restrictions over the export of beer and successfully expanded its business into sub-Saharan Africa, predominantly Lesotho and Botswana. So they actually made a plan. So I'm just going to make a note here with regards to the going concern and make a positive tick there because of the adaptation as a result of the significant impact on local sales. What this does mean is that there could be a risk at the financial statement level because there's now foreign regulation. And if they don't comply with foreign regulations, they might not be able to continue trading. They might face penalties affecting their going concern. I'm also then going to identify the risk at the assertion level with regards to revenue. And now the accuracy of the translation if they sell in foreign currency, and cut off if there are any revenue transactions over year end where the risks and rewards have transferred but they don't have the actual document proof at that time. And this happened in August 2020. BrewBeer is registered for value-added tax as a Category C vendor. BrewBeer is currently experiencing cash flow difficulties. So, financial statement level risk, going concern, cash flow difficulties, and is operating at the limits of its overdraft facilities. So another risk here with regards to the going concern, because of the limit of their overdraft facilities. They're already using an overdraft. The company's poor cash flow position is largely due to poor working capital management. So another risk with regards to the going concern, their poor working capital. The poor working capital management was first noticed in South African operations, but has worsened by the increased production needs to service the new Lesotho and Botswana business lines. The cash flow difficulties prompted the resignation of the previous auditors, as the previous audit fee had not been settled. So I'm going to make a note here. So the previous auditors have resigned, which means this will be a new engagement. And so all my pre-engagement considerations need to be made, as well as there will be risks with regards to the opening balances. They resigned because they could not settle the audit fee. So further indication of cash flow difficulties and the going concern. A point I then now need to make with regards to pre-engagement is, will they settle the fee this time? Accordingly, CA Auditors Inc., herein referred to CA Auditors, was appointed as the new independent external auditor on the 15th of October 2020 for the 31 May 2021 year-end audit. So in October, they were appointed to perform the audit for the next May. So we've been appointed as the auditors midway through the financial year that we are going to have to express an opinion on. So just side note here, guys, this is a situation where in terms of our testing, we could do interim testing if we wanted to. With permission of the client, CA Auditors made contact with the previous auditors who noted there was no reason not to accept the audit other than the risk of not being paid. Okay, so we've already noted that up here. Will they be able to pay the fee? Kylie requested that the audited financial statements be available by 24 June 2021. So now I can see it's pretty much 24 days after year end. So definitely going to have a huge risk here with regards to a tight audit deadline. And guys, that affects the financials potentially being misstated, because within 24 days, will they have identified all adjusting post-reporting date events? So the financials could be misstated because those have not been accounted for. But then this also affects the auditors. They might perform less work to meet the deadline and actually express the incorrect opinion. BrewBeer wants to use these to apply for increased bank overdraft facilities from FinBank. So I've got additional risk here. There's pressure, the financial statement level risk, because they want to use the financials for an overdraft. You are a first-year trainee accountant in the Audit and Assurance Division of CA Auditors. So just to make a note here of your experience, the audit is currently in progress and the following are available: documentation reference and description, Memorandum A, planning notes on trade receivables and related items, Memorandum B, business day article on the 17th of June 2021, working paper 121, misstatements identified by the audit team. So Memorandum A, planning notes on trade receivables and related items. Zara Mohammed is the senior sales and trade receivables accountant with extensive relevant experience. All BrewBeer sales transactions are on 30 days credit from the date of invoice and subject to terms and conditions. So I can see that they only do credit sales. And guys, this could be a reason why their working capital is a little bit of an issue, because you're not actually getting any cash in immediately with cash sales. I then also just need to be aware that if they are on credits, there should be sufficient credit-worthy checks. Otherwise, you potentially have bad debts. BrewBeer currently does not have written sales agreements with their customers. So this now becomes a concern. And this is where I'm going to say there's going to be assertion level risk with regards to your valuation of your trade receivables. If you don't have sales agreements, then will you have correctly analyzed the data to see that you can have credit terms of 30, so done credit-worthy checks and so on. And ultimately, if you don't, there could be bad debts. All invoices are accompanied by delivery notes, which are signed by the relevant customer upon delivery. So I can see that they do have invoices and delivery notes. At least there is some sort of documentation. I don't have a process at this point, guys. They haven't said how they receive orders or anything like that. So all I can really do is say there will be a delivery note and there'll be an invoice. And these will be signed by the customer, which is what I need, authorization of those. Are they pre-numbered? Question mark. I don't know. So there's maybe a little bit of concerns around the authorization of your sales. And so I'm going to put here, again, a risk at the assertion level with regards to the occurrence of revenue. When customers place orders, usually telephonically, Zara issues invoices with reference to the price list that Tim Jones, Chief Financial Officer, approves on a monthly basis. So now we are going to get, there is an order, but then from the order it goes straight into that invoice and delivery note. And it appears to be a lack of authorization. Only Zara gets the order and then creates the invoice. So there could be errors there as well. There is a price list, and so I can also put that here, which is used to create the invoice. So I do have at least some control there around the amount. BrewBeer's expansion of its business into Lesotho and Botswana has been a great success. There is potential for significant growth in both these countries as well as other African countries. So I can just see here the opportunity here to build this business. As a result, BrewBeer sales have grown significantly compared to the prior year. So this is telling me there's an increase in revenue. I'm just going to put a risk here at the assertion level with regards to the occurrence of revenue. Just because if there's significant growth, there could be a risk that maybe it's not all valid growth. Sales to customers in Lesotho and Botswana are invoiced in the applicable foreign currency and delivered directly to the customers. So this is, we've already raised assertion level risk with regards to your accuracy of the revenue because they are invoiced in foreign currency. BrewBeer currently does not perform reconciliations on any of their customer accounts, but does send monthly statements to all customers via email. So no recon is a weakness in terms of our control, but I can add here, there is a statement that comes. Payments received from a specific customer are allocated to that customer's longest outstanding invoice first. Okay, so that also, you can see they don't have remittance or request remittance advice from a customer to allocate to the correct invoice. They just put any receipts to an old invoice. And maybe that customer has queried that invoice, not going to pay that invoice, so you could always have invoices outstanding. The following is an extract from the financial reporting system. So here's 2021, 2020. Extract from the statement of profit and loss. I've got local sales, which has decreased, and foreign sales, which obviously has increased because that's the new line. Cost of sales increased, which I expect because total sales have increased. Net profit has increased, but our operating loss has increased, a loss. So this is a risk with regards to the going concern. Extract from the statement of financial position. Total trade receivables has increased, which I expect because revenue has increased. Local has decreased, foreign has increased. The allowance has pretty much stayed the same, but the debtor amount, total debtor amount, has increased. So I'm going to put a risk here at the assertion level with regards to evaluation of your trade receivables, and this allowance, this estimate, appear to be a little bit on the low side. There is a note N1, and it just says, the detailed calculation for the allowance for credit losses is available from TIM. Trade receivables contain no significant financing components. BrewBeer uses the provision matrix as the practical expedience as suggested by IFRS 9 financial instruments. Okay, I can see inventory has increased significantly. Non-current assets has decreased. Equity and liabilities, I can see equity is a debit, which means that total liabilities are greater than total assets, so they're not solvent. Trade payables has significantly increased. Bank overdraft significantly increased. Non-current liabilities significantly increased. Okay, and guys, what do I have here not being solvent? Going concern risk. N2 for my trade payables. All purchases of raw materials used for manufacturing are on credit, payable within 30 days from the date of invoice. Memorandum B, business day article on 17 June. I'm just going to say that's post-year end. BrewBeer settles beer cartel case. The Competition Commission reached a settlement with BrewBeer today in which the latter admitted that it took part in the 2020 beer cartel. The Competition Commission raised concern about BrewBeer's possible involvement in price fixing and market division on the 15th of September 2020 when beer prices rose after the ban on the sale of beer locally was lifted for the second time on the 17th of August 2020. So 15th of September 2020, so that is in the current year, and they have settled post year end. So I've got a post reporting date event, and then based on this it would appear to be adjusting because conditions were present at year end. This happened during the year. The settlement only took place after year end. BrewBeer has agreed to pay a penalty of 10.5 million, which represents 9% of its turnover for the period in which the practices took place. So there's an amount here, got a rand amount. BrewBeer admits that it entered into agreements and arrangements with other breweries to divide the market through allocation of market shares and indirectly fix the price of beer in order to recover from the lost sales over the lockdown period. Okay, so post-reporting date event, it appears to be adjusting, which means there should be a provision raised for this penalty. In terms of the settlement with the Commission, BrewBeer has further agreed to refrain from engaging in this conduct and to develop and implement a compliance program for all its employees. The Commission has filed an application for confirmation of the settlement agreement with the Competition Tribunal, and BrewBeer has indicated that it will not oppose such confirmation of the settlement agreement. Working Paper 121, misstatements identified by the audit team. Final materiality has been set at 3 million, so very important. Following misstatements have been identified by the audit team. Tax expense. The tax expense submitted in the income tax return was understated by 1.3 million. So, I've got a misstatement. This was as a result of an error in the turnover amounts included in the tax return. When this was brought to Tim's attention, he noted that it was such a small amount they would not consider resubmitting the income tax return with the corrections. So now I've got non-compliance with the Tax Act, and I can see here it's not quantitatively material because it's less than the 3 million, but non-compliance with the Tax Act would be qualitatively material. I've also got a concern here because management won't correct. They're aware and they won't correct. So I just need to question, is this a reportable irregularity? Allowance for credit losses. Foreign trade receivables were not considered when calculating the allowance for credit losses. This is because management believed that the foreign market will not default on payment terms in order to ensure BrewBeer's continued presence in the market. So here's a huge concern. In an estimate, they have not included a part of the asset that they should. It's part of their trade receivables. Okay, and the justification, because they knew in the market is not going to be acceptable. Had foreign trade receivables been included in the calculation, the allowance for credit losses would have increased by 4.4 million. So an additional 4.4 for the allowance for credit losses. This is greater than final materiality. So there is a quantitative misstatement. Okay, let's go and look at the required.